Morning, everybody, and happy Tuesday. It is Tuesday, isn't it? Yeah, it is Tuesday. I keep forgetting what day it is. Yes, it is Tuesday. Perfect. All right, let's see. How's the camera doing? It looks pretty good. All right. Looks like we are all set. Okay. All right. We'll give it another minute and then we start. If you guys have any questions in the meantime, pound them into the chat box. Make sure to address them. Okay. All right, perfect. 2 minutes past the top of the hour. Let's get started. Good morning, everybody, and welcome to a fresh trading week for U.S. markets. Obviously, we're closed yesterday for President's Day. It's been a very quiet market here for the past weeks. Let's put it that way. And I think we need to probably brace for more volatility at some point. It's been choppy and sort of volatile within the day. But volatility would be something where markets wildly oscillate for more than just one day. And we haven't seen that yet. I do think that's going to come. So if you're here for the first time, welcome. This is our morning show. I'm Serge Berger from The Steady Trader. We're going to spend the next 10 or so minutes going over the top things on our mind here for this morning. Let's get started. First of all, I do want to look at a few things that are giving us some concern. Then, just looking at my notepad here. Then I do want to spend a little bit of time on a potential market reaction to some sort of a potential end of war for Russia-Ukraine. And then there's a few stocks I'd like to point out to you. We're going to look at Meta, we're going to look at Palantir, and we're going to look at DraftKings, and then we'll have a look at gold as well. So let's get to it. First of all, I just want to remind you that markets are forward-looking mechanisms. So when we look at the German DAX here, which is up almost 15% for the year, like a month and a couple of weeks. The S&P is up 4. This thing's up 15. Now, it's had catch-up potential, but I think what we are seeing is, again, markets are forward-looking mechanism. I think what we are seeing is the market pricing in some sort of an end-of-war scenario for Ukraine, Russia. We had a meeting this morning with Rubio was meeting with their foreign minister in Saudi Arabia. And so that's what's taking place, and I guess there's steps in the right direction. And so you have to think about this, what this means from a trading perspective and for your portfolio. Again, markets are forward-looking mechanism, and I would argue that once we started getting to the new year and the DAX now is up 15%, that portfolio managers, investors are pricing in a potential end of UK, Russia. And what that means is for German stocks, Germany has a lot of industrial companies. There's a lot of rebuilding that would have to be done of Ukraine. There has to be a lot of, there's a lot of potential for investing in Europe in general. So there is a huge pent-up demand for certain European stocks, and that's what you're seeing. Now, from a trading perspective, this is where it gets really interesting. There is a potential buy the rumor, sell the news kind of thing. So it would not be unimaginable to see a sort of profit-taking scenario in some of these names when we have news, if we have news of some sort of a peace deal with Ukraine and Russia. Again, obviously I have no insight into that. Although, funny enough, my wife is currently in Riyadh in Saudi Arabia on a business trip, and so I should have asked her if she has a feel. I'm kidding. Obviously, she can't get a feel for that. But anyway, this is something I would keep in mind. And even if you're not dabbling in these stocks, what I'd like to just bring across, because I see a lot of people thinking in the present as opposed to forward-looking. The market is a discounting mechanism. It looks forward. Okay, so that's one thing that I would very much keep in mind when it comes to some of these moves, and maybe that then spills over into U.S. markets when we see profit taking there. We'll have to see. The other thing that I want to remind you of, so this is number 2 before we look at some other things. Look, U.S. equities remain, and I need to be more specific, the S&P 500 remains range bound. I've been saying this now for weeks. I know it's boring me, but it's a fact, right? The S&P, it's trying to break out, but it hasn't. It could. I think even the breakout would not last very long, but it could break out for sure. I want to be open. It's the year of the trader. I want to be open-minded. So just keep that in mind. I will also tell you at the same time, though, that we actually have, for those of you guys that are users of like the trender, our momentum indicator, we actually have buy signals in Apple and NVIDIA. Momentum is fleeting. It's short term, right? I personally don't have a lot of trust in this one, in NVIDIA, because it's got earnings next week. But Apple is interesting. And if you look at how momentum has worked over the past few months for Apple, you can see we had a buy signal in November. We had a sell signal in January. They both worked beautifully. And now we have a new buy signal since Thursday, which became valid Friday morning, so the most recent trading day that finished. If you're wondering what might be a profit target here, I actually think if this trade works, we could see Apple into the 250s. So that's momentum, though. That's not like it's a new trend to the upside. It's just a momentum move that might get it to the very upper end of its range. So it doesn't make much sense to me, but it's the year of the trader. We need to be open-minded to this because, momentum has its own way of doing things. So that's sort of a bonus idea here. So that's what's going on potentially with Russia or Ukraine, why the DAX is going vertical. Apple, that's a trade idea, so that's 2 things. Now let me show you a couple things that are concerning to me at the same time. One of them is Meta. And I actually discussed this last week. I don't know how many of you guys were able to join us last week. But when you look at Meta, this is a stock that is, once again, for the most part, at the very upper end of its sort of long-term trading range. And I need to quickly adjust this chart. Yeah, no, that looks good. So it's purely technical, right? Don't read too much into this in terms of the... I'll make it monthly. Here we go. You can see it a bit better this way. It's kind of how you want to look at this, like this, okay? So I would be concerned chasing Meta higher here. It doesn't mean it can't go higher. The fundamentals, are good. Top line's growing. Margins are expanding. But I see a lot of this in all sorts of markets, not only in the DAX, which we just said, but also I see it in things like that are very speculative, like DraftKings. We live in a gambling bubble, as I keep reiterating. This is the weekly chart, right? And God knows the stock can go higher by all means, but it's also going vertical in the near term, right? So this is a stock that over the course of 3 trading days is up 25%. So these are the kind of names that have good momentum, but these are the kind of things I want to watch very closely, because if they change their trajectory and they stop going higher, that could spill over into the broader market. It hasn't happened yet, so it's so far so good. And then of course the poster child of it all, Palantir, that's going to remain its bid because the algos like it, right? But again, the fundamentals don't support this. That's maybe not that important for people who are trading, but that's something that I would keep in mind. Okay. These two lines are the 200-day and the 100-day moving average. They're not all that important for purposes of this discussion, but I like to have them for reference points on my chart. Stevie is asking what these lines are. Okay, and that gets us to gold. The GLD ETF would be the representative, but we do need to look at futures or the spot market. So look, we remain bullish gold. We've been bullish gold since August, September of 2023. It remains one of my largest positions. The question, of course, is, are we going to see, some sort of a pullback in the near term? I personally don't trade gold on a daily basis. If anything, maybe a quick day trade. So I don't have much insight into that. What I can tell you is that I think gold has more upside. I think ultimately it's 3,100 plus is kind of what I'm eyeing for the time being. There's way too many things happening in the world, both from an inflation perspective and from a de-dollarization perspective, for this not to continue. Central banks continue to hoard gold. So I don't see this ending, but, can it pull back in the near term? Of course. Listen, gold has corrected 10% in December alone. So last year in November through December, gold corrected 10%. Can it happen again? Of course. It would be healthy. I wish some of these Yahoo stocks that are driving everything up would correct that much, or 2 or 3 times that much. It would be healthy. But they're not, and that's the unhealthy part about it. But gold actually acts very healthy, right? So that's the difference between something like this and something like this. This is Palantir. This is not healthy behavior, because at some point, whenever this is done, it corrects 50%. But something like gold that acts healthy, consolidates, because you have grown-ups in this market. This is institutional investors, so that they typically don't chase too much. They have reason, but when you let the machines loose, on a thing like Palantir, and then retail as on top of that, you have these huge moves up, and then it just basically crashes at some point. So we want to be careful on that. T.S. Leong is asking, are P stocks going to cause more volatility? I don't know. I do not know. It's a great question. One of the things that you can do is you need to watch currencies. So if I look at currencies this morning, and the euros is a little bit weaker this morning, so it's not like it looks like these initial P stocks this morning were in something that were like breaking in either direction. So I would imagine maybe more volatility, but again, I think it's more that you might see the sell the news effect. That could be possible. And then Mike is asking, what you continue to see in the money flows. Oh, okay. So look, pension funds, it's not so much hedge funds as it is like the bigger investors. Hedge funds are quicker. They're all taking down their tech exposure to a degree, right? And that is the big theme. And that is the big risk trade that everyone is on. Every single US pensioner is long NVIDIA and Microsoft 9 times over. And when that correlation trade snaps, the portfolio gets cut in half, right? And so these guys are doing that. We know that they're doing it. We see it every day. They've been doing it for like 9 months. They're clipping their exposure to these names. Clipping, not eliminating, right? There's a big difference. And they're doing that because of risk management purposes, and as they should. But when you get a week like last week, where Apple, which by the way is not growing, was up 7.5%. Just why not? Because the sun goes up, the sun rises in the east. That doesn't help the retail investor risk manage, and that's really the big concern that I have for many investors out there. That are that are trading, not trading, they're just trailing the tech trade higher. A few names, it's all one trade, it's all one correlation, whether it's Tesla, Microsoft, or all these things, it's all the same thing. And listen, these are great companies, there's no doubt about it. But understanding the flows and the positioning of it is is a very important component. It's not just the fundamentals, right? The fundamentals are one thing and the story, but the flows at some point it gets crowded, which it is. At some point that's going to cause a problem. So that's why I also think it's the year of the trader. A lot of people are going to blow up this year. That's my base case. And not only the trading account, they can blow up their investment account, sadly. So I'm trying to do everything I can to the point where it's probably annoying to make people aware that there's a lot of risk out there for this stuff, but also really, honestly, a lot of opportunity. And that's really kind of my point here. So, so that's it. Again, we've got a couple of opportunities here to focus on. I think, look, we've had a 3-day weekend. Last weekend was nothing but bid. If you look at the futures market overnight, which I do, it's the machines are buying every little bit. So everyone's waiting for news. What I can tell you is whenever we do get news and it's good, then the market's just going to rip higher and gap higher. And if the news is bad, it's going to gap lower. So you have to be proactive. And to me, a lot of that is de-risking on the portfolio level and on the trading side, remaining open-minded and opportunistic. And that means both sides. And that's really kind of the point here. So hopefully we get a bit more traction here and a bit more clarity, because that's really what we're looking for. And the fact that there's so much lack of clarity out there right now, and markets are just going sideways. U.S. equities, remember, Chinese equities are going vertical. European stocks are going vertical, right? To me, it tells me that there's still just unlimited, risk appetite. And the risk appetite, typically, it doesn't end well. Typically, you have sharp corrections that may ultimately go back up again. But so that's kind of where we are right now. So, here we are on Tuesday morning. U.S. markets were closed yesterday. It was kind of quiet, but again, I think we're waiting for news. For those of you guys that are Inner Circle members, we'll see you in about 2 minutes. So I got to sprint over there in our Market Rover member session. We're going to look at a whole bunch of things in more detail. We've got some things we're going to look at in Peloton as well. A couple of opportunities. We'll see you guys there, and also in the chat room at the bottom of the hour. See you guys there, and back here tomorrow morning. Please, 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 very important. Please, as always, subscribe to the channel. It's free here, because when you do that, you get alerted in real time when we go live. And also give us a thumbs up, like. We'll see you back here tomorrow. Take care.